Okay, somebody read my cartoon and laugh. Now, the scary thing is that this is almost perfectly true, people. Nobody knows which way the market's going to go. It really almost comes down to a bull and a bear flipping a coin to see who goes out first. Okay? These are the items that we're going to be talking about foremost. We're going to talk about some trading philosophy, psychology. We're going to have an introduction to level 2. We're going to get into some terminology this afternoon. And we'll start reading market data immediately so that we can start to look at how the market actually works. This class is for you people. You ready? You need to ask questions, but I need you to help me out here. I need you to stay on topic. If I'm talking about level 2, don't ask me about sectors. If I'm talking about sectors, don't ask me about level 2. Stay on topic and I'll answer all your questions for you. Alrighty. I didn't mention it, cell phones. I have no problem with cell phones. If you have them, please just take your call, go out the door, take care of business, and come right back in. You don't have to turn them off. All I do is ask you to turn them down to vibrate or low ring. Alrighty? I'll give you plenty of breaks. Usually you get a break about every hour, hour and 15 minutes, depending on where we are in the lecture. But if your bladders are not on my schedule, feel free to just get up to shops here in Southern California. And I was making some very, very good money with it. It was a wonderful living. But the problem is that I went to one of the online brokerages. Of course, they weren't online in those days. We didn't have computers, okay? Picked up the telephone, and one of the bigger ones said, Mike, come on in. We're bullish on hundreds of dollars. In fact, I lost all the money I put in there, and then I fed the kitty another 100,000 in margin calls. By 1975, I was down almost $500,000. Okay, I was very, very upset, angry beyond belief. And I said, who's got my money? Who took my money? It wasn't just the market taking my money. Somebody has my money. Who made money on this deal? And of course, it was the brokers. So that was who I started to focus on. I went out and I bought a couple of books, okay, one of them which is Reminiscence of a Stock Operator. You'll find it in your reading list and your manuals there, okay, on your book list. And I read that, and it was the story about Jesse Livermore. It was kind of fictionalized, but Jesse Livermore was one of the great traders of the beginning of the 1900s through the 1930s and stuff. And throughout the book, there was just one recurring theme that kept coming up. And that theme was don't lose money. Learn how to cut your losses. And with that thought, and only that thought, I became an enlightened investor. I still wasn't a trader, but I started making money by simply buying stocks. I didn't know how to go short. I didn't understand the downside of the market. I didn't understand the intricacies. But all I did was look for something that was going up. I would buy it, okay? And the moment it started to come back down, I would sell it. Well, that eventually evolved into a very crude plan. My plan was that anytime it was over 5% up, okay, and stopped going up, I would sell it. And if it ever went down to 1%, I would sell it. Well, I started making more money, okay, in the market than I was as a dive shop operator. And by the late 70s, early 80s, I was making a ton of money in the market. Well, life handed me a rather bad moment, I should say. Life did. I actually did it myself. I managed to break my back, okay? And I didn't get hit by a car, and a bridge didn't fall on me. I actually did something foolish, and I'll tell you guys all the grim story about it on break. But basically, I could no longer teach diving, Not with a broken back. I couldn't put anybody else's life at risk because I couldn't perform. And I realized that I wasn't going to be making my living with my body anymore. So what did I naturally turn to? The market passed my Series 3 test. And I was sponsored by a company over here in Irvine who dealt with that kind of stuff. And I went to work as a broker. And I called people up on the phone and I said, hey, this is Mike. Remember I talked to you about 6 months ago, and at that time I had a good recommendation for you. You You guys ever have one of those kinds of calls? Yeah. Okay, they're reading off a card. You ready? Keep smiling and dialing. And I couldn't do this. I wanted to trade. I wanted to be a big trader, okay? So I applied to Drexel Burnham Lambert in Chicago, and in their wisdom, they were smart enough to hire me. And I went back there and worked in the pits. I was a floor runner for a trader, which meant I fetched his coffee, okay, and I ran his tickets over to the phone bank. Now realize, guys, this is, the early 80s. They didn't have computers. I mean, they had rudimentary ones, but not like you and I know them, okay? So everything was still done by paper and people and telephones and calling it into trade desks and stuff. Really taught me the meaning of trading. And it was there I learned, people, and this is very, very important, that the market does not necessarily work on supply and demand. There's a tremendous amount of manipulation that goes on in this market. Some of it legal, some of it a little in the gray area, shall we say, okay? But there is a tremendous amount of manipulation. So we have to always be mindful that it's not just simple economics 101. A lot of demand, limited supply, price goes up. A lot of supply, limited demand, price goes down, huh? So we're going to see things that are going on in here. Far from here, over in South Coast Plaza in the Union Bank building, it was called Cambridge Financial. And they made deals in precious metals only. They didn't deal in corn and grain and hog bellies and orange juice, strictly the precious metals. And in their wisdom, they eventually made me their head trader. So I started trading for the company. Now, you want a sweet deal. I got 10% of anything I made, and I didn't participate in any of the losses. And I had almost unlimited funds to work with. This was wonderful. But the bad news is that in order to corral, and they go around and they take a little bit of blood from everybody. They never want to kill any one of the sheep, okay? But they want to take a little blood from every one of them every month, one way or the other, whether it's in fees, whether it's in commissions, whether it's in slippage. I want to buy this for $20, and you get filled for $20.05, and you say, well, I wanted this stock anyway. What's a nickel? Well, a nickel on 1,000 shares is what? $50. And suddenly you think you're getting the best commission rate. Oh, I'm only paying $7.95 or $5. But you have a $50 load on that. And if you go the other way, then that's not just $57. It now becomes what, $114, huh? They slip you a nickel both sides. And so those cheap commissions really start to add up very, very quickly if you look at the load. Well, I was that person. I'm sure you've all seen some of the TV commercials where the floor manager comes out to his brokers and he says, guys, I have, championship ringside tickets here for the basketball game, and we got to put some lipstick on this pig and move it. If you sell all the stock, we'll be all heroes, okay? Well, I was that person. I used to walk out onto my floor and I would see all my smiling brokers there who wanted to make a living, and I'd say, guys, I'm looking at my charts and I'm reading my Reuters news service over here, and I say that silver is going up. I want you to get on the phones and call your best customers and tell them to buy and tell. That I started feeling guilty. Okay, when I was in the pits, I was insulated. It didn't seem like I was trading against people. But here I was literally saying these things. Let's put some lipstick on this silver and move it to these brokers. And how wonderful you have it now. I was paying $150, $170 one way. So I had to overcome, $350 to $400 break even. But I made money. And the reason I made money is because I understood what was going on the other side. And during this course, I'm going to give you close to 1,000 cliches. I want you to think about them, write them down, noodle on them, because they really, why is a cliche a cliche? Because it's most often right, okay? So your first one, and the one I'm talking about right now, is when can then get the cheese. So because I understood the trade desk situation and how the brokers used the order flow, I was able to see the trap and go around it and still make a living. Again, I don't want to drag this out all morning long here, but in 1997, I started hearing through my sources and friends in the industry that a new idea is coming to the market. It was called direct access trading. And I knew by its very term, intuitively, I understood what direct access meant. It meant I could go around that trade desk, that I could go directly to the market, and I did not have to have a license supported by a broker-dealership. And that was wonderful. I could go trade. I could become a virtual market maker. I could go to the NASDAQ and buy at the bid and sell at the offer, just like the big guys do. Well, yeah. Well, needless to say, I ran to that. And I went over here to Irvine, California, and there was a floor there. It was called Momentum Securities. And it was the floor I had talked about earlier. And I walked in, and of course, I was used to the roar of the pits, alrighty? And I opened the door. So I started walking, and I was standing behind people, and finally somebody gave me an ugly look, and I'd back off, and their fingers would go up, and they'd type on the keyboard a little bit, and every now and then you'd hear somebody going, "Size to buy on Mr. Softy." Yeah. Size to buy on Mr. Softy? I mean, I wonder if Microsoft is going up, okay? And so I started to hear some of the trading lingo started coming out of these. They weren't Englishmen, and they weren't smoking. They were trading, okay? So I opened an account there, and they gave me a station, and I started trading. It was wonderful. You guys will see, you'll be amazed when you see the speed of our transition for you. And they opened the door, and they said, "Mike, please just answer these questions openly and honestly to these students." And with that, they left me with the class. And that really impressed me. I mean, you know, I could have said anything. They didn't care. They wanted to just have... Alrighty. Questions so far on anything I've talked about? No? Okay. Yes. Yes, I.
Series 3 certification?
A Series 3, what is a Series 3 certification? Series certifications are fiduciary tests so that you can handle other people's money. A Series 3 in particular allows you to trade commodities futures. Okay, so you could handle things like hog bellies or oil, frozen orange juice, grain, sugars, and of course the precious metals. The next one up would be like a Series 7. And Series 7 is probably one of the larger catch-all type licenses. It allows a person to handle not only commodities, but also stocks and options, and handle margin requirements for people. It's just a license to prove that you know what you're doing when you're handling somebody else's money. They go all the way up, you know, Series 24 and 55 and 63s and stuff, depending on what you're going to do. Yes, Al?
These people that you call, they call themselves brokers. A lot of them are just kids. They're not really brokers, are they?
Okay, well, what is a broker? I'll just ask, these are just kids and they're called brokers. Well, a broker is just that. He is a salesman who is licensed, and then they call people and ask them if they wish to participate with that broker-dealer. Most of your broker-dealers are under 30 years old, and therefore they don't have very much market acumen. And they're really designed to do what? Make sure all the I's are dotted and all the T's are crossed on your terms and agreement. And then you gain more about Amgen or Cisco or Microsoft or whatever the hot topic is this week than you do. Okay? In fact, by the end of this course, you'll know a lot more, a tremendous amount more than your broker will ever know.
They call them, a lot of them call themselves financial advisors. How do they get away with that?
Well, a financial, and these guys theoretically know how to put a portfolio together and how to balance it so that if one sector would go down, the whole portfolio would not go to heck in a handbasket, so to speak. Now, as to whether they're effective or not, one of the first things that I want to point out to you guys that you really have to keep in your hearts and your minds. People, nobody has your best interest at heart. Nobody. Okay, maybe your mother. Do you trust her? The only person who really has your best interest at heart is you. Okay? You should be in control of your money. You should be in control of your fate. You should be in control of your destiny, not somebody else. Now, if you don't know what you're doing, you shouldn't risk money in the market. And you shouldn't listen to somebody who doesn't have your best interest telling you to risk money in the market. That's hopefully why you're here. Let's get an education so that we shall advisor or to a broker and hoping that he's going to do a good job for you. People, the word hope is literally a 4-letter word to a trader. We don't hope. We calculate, we analyze, and we execute. We do not hope. The moment you start to hope, you're doomed. Okay? That's the first. If you go, gee, I hope this situation works out, close the trade. That's your first inkling. As soon as you have that little tiny word coming into your head, hope, stop the perception of the market. This distills out into one word that we'll use over and over. What is the sentiment? Who thinks what about what? And we need to really talk about these two. And throughout this course, we're going to spend a lot of time looking at your psychology and, of course, the herd psychology. If you were to ask any trader across the board, I don't care whether it's bonds, stocks, options, currency, commodities, anybody, they will tell you that trading is about 70% psychology and only about 30% analysis and execution. Boy, that's an awful lot, isn't it? I mean, what is analysis and execution? Well, analysis is picking the right stock in the right direction on the right day. Okay? Execution, of course, is getting in at the right time for the best price and getting out with the most profit. That's execution. The rest of it, what makes you take that trade, what makes you hold that trade, what makes you set goals, what allows you to see your stop losses clearly, this is the psychology. This is what sets you up. I find that most people on a one-to-one basis are intelligent, articulate, thoughtful human beings. But as a group, particularly Americans, they're dumb as a stump. Okay? They follow what people tell them to do. And you've seen it on CNBC and the other medias. You know, somebody comes out and says, we're raising Acme, the fictitious stock, to a strong buy. And what does the public do? They go out and they buy it. They react to it, okay? They listen and they believe. Well, I'm going to ask you guys right up front, and you'll all get the answer right. If somebody tells you to buy, who are you talking to? A buyer or a seller? A seller, yeah. The only reason he's saying you should buy it is because he already owns it. And he'd love to sell it to you, okay? So you got to be suspicious of that. Why would they do this? How the herd behaves. And I'm sure you've all seen a cowboy movie. Okay, it's late in the afternoon. Cowboy Bob is sitting on his horse and he's riding around the herd, and the cows are standing there in the sunset and they're going moo, 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 okay, and he's singing a song, and bang, all of a sudden a bolt of lightning comes down and the steers start to run, their eyes get big, they lay their ears back and they're running towards the cliff. And old Cowboy Bob, he's beating his poor horse trying to turn the herd. What happened here? Did the lightning bolt actually strike one of the cows on the rump? Or was it 15 miles away? Does it matter? No, it's a function of perception. Okay? The cows perceived that there was danger. And that's all that's important to those cows. They wanted to get out of the way of danger. Well, we need to be able, as traders, to determine where the herd is going to run, what direction, how fast they're going to run, and how long they're going to run. Once we determine that, we can start to make some decisions. The first thing is we can get away from the herd, right way out in front of it, so we don't get stepped on, we're not eating any dust, just stay out of its way, let it do its own thing. Next thing we can do is follow the herd and wait for weak things to drop out. Maybe we can use those. And of course, the third thing that we can do is learn to ride right alongside the herd and nip at their flanks. After all, that's where filet mignon comes from. Okay? So, by understanding where the herd goes is going to present us with a variety of different opportunities. Okay? And we need to be able to see that and understand it and take full advantage of it. Now, the herd is constantly being manipulated by the media, and of course the media is being manipulated by whom? The market makers, the specialists, the financial gurus, okay? People don't ever make the mistake when you look at something like CNN or CNBC or even Bloomberg TV, okay? Who owns those stations? Well, you might say that there's a parent company, but isn't it really the advertisers? Do you think somebody who puts hundreds of millions of dollars into advertising on a daily basis, do they have? The other flip side to the psychology is yours. And one of the first things I'm going to ask you guys to do as homework, okay, is tonight when you get back to your homes or to your rooms, for those of you who are traveling, I need you to go into the bathroom, turn on the lights, close the door, get real quiet, and look in the mirror into your eyes. Because if there's one thing that is true about trading, you must be brutally honest with yourself. You fool yourself. You play mind games. Oh, I know this is a good company. I'll hold it just a little bit longer. It'll come back. That smacks of hope, people. We don't hope. We follow a plan. And if you lie to yourself and you go, I'm not going to follow this plan. I'm not going to honor this stop loss. I know. You don't know. The best we can do as good traders is put probability on our side. So what would be the watchword for the trader? How about, to thine own self be true? I don't care how you treat your family, or I do, but the most important thing is that you be cruelly and brutally honest with yourselves. And we'll talk about some of the little foibles, little pitfalls that you guys already have and how we can overcome them. The next thing, of course, is the challenge of trading. Okay? Is it a passion or is it a passing fancy? Well, in these days, after the big breakup of the tech sector in 2000, we find that the students that come in here are a lot more serious. But certainly in the 98s, 99s, and 2000s, the people that were coming into the classrooms were the get-rich-quick kids. Okay? Oh, just show me that buy button. You ready? And everybody was doing it, so we had to do it. That was their attitude. Nowadays, most of the people who come into Online Trading Academy are very, very serious businessmen. They want to start a new business. And that's what we're trying to do for you guys. Just remember, you can trade part-time, you can trade full-time, but you can't trade as a hobby. You got to run it as a business. That means you have to account for everything. You know, not just your commissions. You got to account for the DSL or cable modem, whatever your internet connection is. You've got to account for the paper clips, your pencils, your pens, obviously your computer and your commissions and any other fees that come along. You got to run it like a real business. You got to sit down, have a set of books. You ready? It can't be a passing fancy. You've got to want to do this. You've got to be determined to do it. Okay? And it doesn't matter whether it's trading or setting up a Ben & Jerry's ice cream store or a Payless shoe store. Whatever franchise or small business you'd be starting up needs the same work, diligence, and effort as it does to start a trading business. Does that make sense to you guys? Okay. So you have to have a passion for this. You want to really do it. That's what the challenge is. Okay. The third item there is building a foundation. Well, obviously, you guys have taken the first step. I applaud you. You should applaud yourselves. Look around. This is a small class. There are 285 million Americans out there who haven't stepped out of the herd. You guys have. You've looked for a better way, and we hopefully, over the course of this class, will give you that way. But you've stepped aside. You're different. Do you guys understand that? You really do need to pat yourselves on the back a little bit. And of course, the starting of all this is getting a good formal education. Everybody has tried trial and error is fairly expensive. You've got to go into trading, though, with a positive approach. Alrighty? Trading is very, very stressful on you. Okay, so you have to be careful about keeping your mind and your spirit up. You've got to think that you can do this. Okay, you've got to have some determination about this. And I don't want to say you have to be Pollyannish, but you know, it's yes I can, yes I can, yes I can, and other little old trains. Okay? And I look so much forward to the opening on a Monday of the market. It's not funny. Sunday night, I'm chomping at the bit. I mean, I've got a shining sword of information, a glee in my heart, and a need to compete. Okay, and that's what makes me tick. And you've got to come up with that kind of a vigor, that kind of a passion. You want to keep it positive at all times. Let's talk a little bit about market misconceptions. Do a little reality check here. The single biggest killer to you guys are your own expectations. Most people do want too much too soon. Alrighty? Not one of you guys is going to make $1 million by Christmas. Okay, this is a skill set. It has nothing to do with intelligence or academic education backgrounds, having an MBA or not having it. No, it has nothing to do with that. It has to do with more things like self-character, determination, diligence, stick-to-itiveness, following a plan religiously, zealously setting out some rules and obeying them time after time after time. Okay? The first misconception put out by the media is that all traders fail. Okay, well that's not true at all. Okay, in fact, it was surprising to me. I heard on CNBC they said, well, 80 to 85% of the day traders are losing all their money. And I went, wait a minute. How many people have heard this statement? It's by the Small Business Administration. 90% of all startup businesses fail in the first year. Has anybody ever heard that before? Yeah. So doesn't that sound like starting a trading business at least 5 to 10% safer than another small business, according to CNBC? Yeah, sure. What as well? Well, let's say $300 to $500 a day. And that's one of the things I want to talk to you guys about. Think about this. If you only made $300 a day and you did it 4 days a week, 10 months out of the year, well, if you get your handy-dandy calculators out, you're going to find that that's about $50,000. You can check me out a little later, okay? Well, Mike, I'm making more than $50,000 a year now. I'm an executive. I've got an MBA. I'm working in this software company. I'm a real estate broker, and I'm making big money. Yeah, but I want you to think about some things here, people. First off, I said 4 days a week. So that means every weekend is a 3-day weekend. And I said 10 months a year. That means you get 2 months vacation. Most of you who are making more than $50,000 or $60,000 a year, you're working 50, 60 hours a week and getting your family and friends together for a rotten 5-day vacation is a nightmare. And by the time you get to Hawaii or wherever you're going, it takes you 2 days to decompress, and then you start worrying about packing to go back. Just about the time you relax, that 5 days is over. One of the great benefits to trading is being independent. Okay, I stand before you with a long sleeve shirt on, but I don't wear a tie because they can't make me wear a tie. I don't like ties. I think starting the day off with a noose around your neck is not a good idea. Set your goals too high and you fail, well, then that crushes you from a psychological point of view. On the other hand, I don't want you to have the idea that you're going to fail. You're going to get out of this exactly what you put into it. As much effort, time, and energy, that's how much is going to pay. I mean, Tiger Woods isn't one of the greatest golf players in the world because he doesn't hit golf balls. That poor guy probably lives on a range. I'd be willing to bet dollars to donuts that he hits 1,000 golf balls a day on average, maybe more. And when he isn't on the golf range, what is he doing? He's probably in a gym somewhere working out so that he can carry his clubs, make those big magnificent shots out of the deep grass and all that with strength and control. The man is devoted to his sport, to his business. And you don't have to have an MBA to be a good golfer. You don't have to have an MBA to be a good trader. So these are the misconceptions. No, you're not going to make money the first day. In fact, if our statistics of our students are any sort of a guide, we find that you guys are going to lose some money. I'm sorry. You're going to pay 2 tuitions. You've paid one to OTA. You're going to get that back from the broker-dealers, which is kind of fun. You can get them for a change. Okay, and you're going to pay a tuition to the market. Our job is to make sure you don't pay too much to the market. Our job is to ramp you up, okay, in your learning curve so that you can start to develop the skills that we're going to teach. But you have to hone them. You have to take them out and get experience and see them work in the real world. Doing it just in academics or reading a book, well, you've all read books. You already know that doesn't work. That's one of the reasons we insist on you trading live in here, not on demo, with real money, because it's different. It's not only different in execution, but it's different up here in your head. When you have pressure, when you have your money or ours on the line, you think differently. And we need to overcome that. The trading life is a double-edged sword. And by that I mean everything in trading is double-edged. We'll talk about that. But the trading life, I only trade these days from about 5 minutes, 10 minutes to 7, or else it's going to affect our markets. So I'm constantly, even though I only trade for an hour and a half, an hour and 45 minutes a day, actual execution, I have to devote a great deal of my time to being focused on my world. And I've been doing this for a while. So you guys are going to have to work a little harder, huh? Good. The next thing is that you can't stop trading. Once you start, you can't pull out. People, there is as much to understanding the numbers and the graphing and charting. We're going to talk about all that. But that's all good stuff. But we also have to understand that there's a rhythm. There's an actual movement to the market. There's a dance step, if you will. Some days the market is a waltz. Some days it's a cha-cha. Okay? And you've got to know that rhythm. And you've got to start to feel it. And once you get that, boy, I'll tell you, your analysis and execution becomes a heck of a lot easier. The problem here is what? If you go on vacation, you step away from the market for a month, you lose that feel. And I like to go on vacation. I still dive a lot and take underwater photographs. And if I go down to the South Pacific, down to Fiji or whatever, if I go, I'm going to go for 4 weeks, 6 weeks at a time. Pay for all that airfare and travel time. You might as well stay for a while, okay? Well, when I come back from one of those trips, I don't immediately start trading. My God, usually when I land into Los Angeles International, I'm surprised to still see the lights on. Okay, when you go down to the South Pacific, I mean, you are so devoid. You're so devoid of information. And there are no televisions, radios, your cell phone doesn't work unless you have one of these, what do they call them, geosynchronous satellite phones. Okay, a cell phone doesn't work. So I haven't a clue. You know, it's amazing. I come back, oh, hey, they're all still there. Life is good. You know, I hope the cat's still home. So you don't immediately start trading after that. It takes me a couple of weeks to catch back some zero gain. In other words, for every dollar that I make, then Cy has lost $1. For every dollar Stephen makes, one of you guys has lost $1. If we put an edge on the trade, perfectly net sum zero, because there's what? Always new money coming into the market. There's always somebody who wants to add to this portfolio or take some out. So it's not perfect. But how is money made and lost? Well, it's real simple. And it's part of your social context that makes you not see it immediately. I want you to think about something. How many people here remember 1987, Black Monday? I think it was October 10th. The Dow Jones fell something like 20, 21. You need somebody to buy it from you if you want to be a seller. Well, who was buying in 1987 or in any of these other major dips? Who bought that stock? Well, the specialists, the market makers. Could we generalize and say the professional trader? Okay, and at the top, when the public was buying all the stock, who was selling it to them? The professional trader. So this starts to give you the first inkling into how this system works. Professional traders going to buy when prices are going down from the public, and you're going to sell to the public when prices are going up. Now, obviously this has to be done with intelligence. Nobody's here to catch a falling knife. For gosh sakes, I'm not going to try to convince you to buy Enron. I probably sold it to them. It wasn't their brother-in-law, their sister didn't lend it to them. Where did they get it? A professional trader. And that's who we aspire to be. So this is how money is made and lost. We know more than the public does. I call the public Joe Lunchbucket, the unwashed investor. Okay? And thankfully there's nobody named Joe in here in this class. I had one. It was grim. I kept saying, and Joe is a moron, and this guy kept glaring at me. You know, I'm sorry, I got to call them something, okay? But anyhow, Joe doesn't have a clue. I mean, Joe comes home from work and he turns on the television and somebody tells him to buy or somebody tells him to sell, and he goes and does it. And why are they saying it? For his benefit or for theirs? They're saying it for theirs. Poor Joe doesn't stand a chance. The public is always behind the power curve. The public is always behind the knowledge curve. The public is always behind the execution curve. Okay? These are our advantages. The last thing is the paradigm shift from investing to trading. We've got to help you unlearn this social background, and to some extent even the food you eat influences how you perceive the world. Okay? Well, you got to get over some of this. The problem is the market uses English, but they use different concepts in the same words. Let me give you an example. Ken, you just bought 1,000 shares of Microsoft. Are you bullish on Microsoft? Yeah, he says yes. Do you guys think he's a bull? He bought 1,000 shares of Microsoft. Is he bullish on Microsoft? No. People, he's a bear. Okay? Think about it. The moment he bought the Microsoft, he became a worried seller. He's a downward pressure on the market. Now, in his mind, he may be bullish on Microsoft, but to us, to the rest of the market, he is a downward collapsing pressure. He could be the straw that breaks the proverbial camel's back. After all, if we looked at it from an aspect of a big pile of money, and we all put our hands over this pile, and then we watch each other and he turns and tries to sell it for 13. But what happens? This person, Pauline in this case, okay, she says, I don't want to pay 13. I'll give you 12 and a half. Does everybody see how we're starting to reach the top? It went up $1, now it's only up 50 cents. And she buys her for 10, 9, 8, 7, 6, and the cycle repeats. Okay? But he who sells it at the highest price, okay, is going to get some money. Did she make money? No, she lost 50 cents. She bought it for $12.50 and sold it for 12. So the last winner was him in the corner. Okay? He's bought it for 12 and sold it for $12.50. Anyhow, that's how the cycle goes. That's how money is made. Now we have to get you to shift from this. I assume everybody in here drives a car? Okay? If I had an 8-sided red sign, what's the word in the middle of that sign? Stop. One of the different concepts in the market, because they're subtly different. And you may be reacting to the wrong symbol. That makes sense? So, in essence, trading then becomes the study of mass behavior, okay? And then our internal behaviors and how those all affect price. Now, what we're looking for are repeating patterns. Now, nothing repeats perfectly. Okay, a lot of people say this is a chaos. Okay, it's not ordered. And what is chaos? Well, chaos is defined as behavioral, non-repeating patterns. Huh? Well, let me give it to you as an analogy. Not everybody here golfs, but I think you'll get the point. If you were a golfer and you were a member of a specific golf club and you played golf on that golf course every day of your life, you've already made your millions in the market, you're a hot trader, you got plenty of time and you love the game of golf, and you play around every day, 18 holes. Well, people, you never make the same shot twice. You make very similar shots, but there's always variables that are different. You're standing on the first tee with your favorite club, your favorite kind of golf ball, the same tee at the same location. But this morning you had ham and eggs for breakfast, yesterday you had pancakes. Today the bird is chirping in the tree on the right, yesterday there was no bird. Today the humidity is 85%, yesterday it was 65%. The wind's out of the north, the wind's out of the west, you get my point. Okay, that there's always variables that you cannot control, so you're not making the same shot. Okay, but are the shots similar enough that we could set up the same way? Yes, and unless the conditions are really bad, now it's a 30-mile-an-hour wind out of the west, we wouldn't even change. Okay, it's not a second mortgage on your house. It might be a piece, but not all of your retirement plans. So what is risk capital? It's the money that you could start a new venture. And like I say, whether it be a Ben & Jerry's ice cream store, an appliance repair, or a trading business, that you could lose this money, I won't say without regret, but it wouldn't change your quality of life. Now, I know nobody would do this, but theoretically, you should be able to take $10,000, $20,000, whatever, okay, change it into $1 bills, drive down the freeway, and every 5 seconds throw a couple bills out the window. And at the end of the trip, have nothing and say, okay, well, that wasn't fun, but I'll still have dinner tonight. That's what risk capital is. Now, I don't want you people to throw money out the window. I don't want you to be foolish with it. I want you to treat it with respect. You got to learn to honor money. But that is the downshot. What if it doesn't work out? What if you opened a Ben & Jerry's ice cream store in Nome, Alaska in the winter, and you, in your wisdom, chose your ice cream of the month to be Liver Ripple, and with a plan? I've said this a couple times. People, I want you to consider that a trader opens a transaction based on 75% or 80% probability of success. That's a trader. He doesn't know that he's going to have 100%. He doesn't know that the transaction is going to always go in his favor. The best he can do is stack probability on his side, okay? Sometimes it'll work, sometimes it won't. When it doesn't, we got to learn to cut our losses early. A gambler, he opens a transaction on what? Flip of a coin, 50-50? And a person who opens a transaction on less than 50-50, what are they called? How about a fool? And what's the cliche for a fool? A fool and his money will soon be separated. Okay? So people, we are neither fools nor are we gamblers. We're going to go about this like business people. We're going to set up a plan and we're going to work that plan, and if the plan fails, we're going to adjust the plan. If the plan works, we're going to collect the rewards of our efforts. By the way, just talking about trading, as just a personal note, people, you don't put all your money into trading. I run my trading business with about 18% of my liquid assets. Well, Mike, if you're such a hot trader, why don't you put 100% and make millions of dollars? Because I am such a hot trader, I understand that there's only one coin in this market, people. On one side of the coin is reward, and on the other side is risk. You cannot have more reward without understanding that there's more associated risk. And I'm going to ask the question in here, and you're probably all going to nod your heads yes, or excuse me, all nod your heads no. Does anybody in here have unlimited trading capital? No. All of you have a finite amount, okay? And we'll talk about that as we go along, how much is absolutely needed and all that. But the point is that you guys really can't afford big rewards. Why? Because you can't afford big risks. Until you start to build your account up with logical, intelligent plans and start to make it swell, you can't afford to have big winners. Everybody in this room would love to have a 10-point winner. But how many of you can afford a 10-point loser? Investing with a purpose is really nothing but long-term trading. I like to step myself away from investing because I have a plan. Some of my money, the big part of it, is out there grinding out 5, 8, 10% year after year after year. The other portion I make income with. That's my trading portion. And as I said, I use 18. At the end of this course, I'm going to expect all of you guys, and I'll show you how to do it, of course. We're going to do it step by step. You have to develop a business plan, a trading plan. You're going to submit it to me and the other instructors. We're going to correct it and show you where you went right and where you went wrong. Okay? And we're going to together build this plan up so that you have a guideline, a roadmap of how to put your money to work and get the best out of it. Does that make sense? Like I say, people, I don't need pupils. I need students. You guys know what the difference between a student and a pupil is? A pupil is somebody who sits in a classroom. A student is actively participating in their own education. I need you guys to actively participate. I can't give you the old Vulcan mind grip and download this stuff. I need you to pay attention, I need you to ask questions, and I need you to review and do your homework and work with us to help you accomplish your goals. It is a game of longevity, people. This is not a sprint. This is a marathon, okay? This is a journey of learning and hopefully gathering money. They stop losing money. By the 6th month, they're making green trades every day. Are they profitable? Well, they're profitable on a day-to-day basis, but they've lost some money at the beginning. So it may take you 6 months, 9 months, some of you a year, depending on how much time and energy you devote to it, before you actually become profitable. You have more money in your account than you started with. You ready? So consider that this is not a get-rich-quick scheme. It's going to take a while. It's a set of skills. What are those trading skills? Stochastics, MACD, that kind of stuff? No. What we're going to do is be able to take a look at the overall market. I want you guys to learn to trade down. Just think about a funnel, okay? We need to be able to look at overall market sentiment, correlate it with our United States general markets, take it down further to the industry and sector that the stock we're trading is in, look how that information is going to affect it, and ultimately, kind of almost on a microscopic level, will we finally make a trading decision on a specific stock. You've got to know what's going out there. People, the global village is way too small today. We hear every day, OPEC is cutting production, and this terrorist is blowing this guy up, and this country is attacking that. Okay? And so we have to look at these things. The next thing is that you have to learn to anticipate. People, all your lives you have been reacting. Stop reacting. This is not a game of checkers. It is a game of chess. We've got to look out 2 moves. Somebody's in front of us, we don't automatically jump them. We need to set traps and let the people, the quarry, the money, the reward fall into the trap. Okay? You've got to learn to anticipate. That means to look forward. Okay? To look forward. We've got to be able to identify and take full advantage of momentum. How many people have read a book on trading and it says, let your profits run? Y'all have. Okay, good. You know, cut your losers short and let your profits run. People, we're going to set up plans and we're going to look at some basic general rules. I'll repeat them for you, but How about the first and most important general rule? Buy low, sell high. Okay, well, how high is high? Well, we're going to have a goal. But what if the thing goes right through that goal? Can we let it go higher? Yes, that's what momentum is. And we've got to be able to identify that so we can make bonuses. Oh, I think this thing's going to move $2 in 2 days. Great. We got $1.90 on the second day, and all of a sudden big volume comes in, great sentiment comes into that stock, it beats the street on its earning, Alan Greenspan is smiling, okay? We got to be able to let that thing run, and we get $2.50 or $3 out of it instead of the 2 we expected. That's identifying momentum and taking advantage of it. We have to select realistic entry and exit points. People, waiting costs you money. Okay, waiting to get in, waiting to get out costs you money. How many of you have ever done this? Tell me, be honest with me here. Okay, you're looking at this really cool stock. It's called Acme. Okay, by the way, I use Acme because of Wile E. Coyote in the Roadrunner cartoons, Acme rockets and all that. Anyhow, you're looking at this really cool stock, Acme. Okay, you go, man, it's $25. If this stock goes up to $25.15, I'll buy it. It starts going, $25.05, $25.07, $25.10, $25.12, $25.14, $25.17. You say, wow, if it comes back to $25.15, I'll buy it. $25.20, $25.25, $25.30. You go, well, now if it goes up to $25.40, I'll buy it. $25.35, $25.37, $25.41. You go, oh, I missed my entry. Now, by the time it gets up to what? $25.50, you're greedy. You're actually slavering, aren't you? I've got to have it. And then you buy it, and what does it do? Goes straight back down because now you've bought it at the top. Okay? Now, what's the reality here? If you think Acme is going up, it doesn't matter what the price is, buy it. And manage your risk. Set a stop loss. If I'm wrong, I'm willing to lose this amount of money if I'm wrong. If I'm right, I'm going to make some money. But I'm not going to lose any more. We draw a line in the sand, and we will not cross it. I don't care what that line is. $1, $50, $100, $1,000, you set the line. But do not cross it. Now, is there we're not throwing darts here. Understand, we looked at Acme, we understand why it's a cool stock, we understand why we think it's long, we have a plan, we know that we want to get into it somewhere around $25. But do you understand what I'm saying about when I talk about realistic entries? I don't set goals out in the future that may or may not be attainable. What happens when it gets to $25.14 and then where we're going to go? Okay? But if we calculate, again, we see $2 in 2 days, and we're up $1.90, and all of a sudden rain clouds come over and lightning starts to go on, and Alan Greenspan is frowning, okay, and somebody blows somebody up in the Middle East. Are we going to wait for the $2, or are we going to take the $1.90? Let's take the $1.90. You can't go broke taking a profit. For gosh sakes, people, you're traders. You buy and sell, buy and sell, buy and sell. You don't buy, hold, and hope. So you sell, make the $1.90, and it goes up higher, buy it again. One of the things that we can say with direct access, because of the speed and control that we have, is a little different. Buy low, sell high, that's true. But people, we can buy high if we can see that we can sell higher. We don't have to buy dead low because we're going to have such cool control. I don't like this, I'm out. And I know that I'm out because I can see it right now, real time. I don't wait for somebody to confirm it. I don't wait and see this order pending, order received, and finally order executed. It's all in a split second. These broker dealers, they come out here and they say, I think the latest one right now is the power of nines. Okay? If we don't fill you in 9 seconds, we'll give you 9 free trades or something like that. Okay? Come on, guys. The speed of light travels at 186,300 miles a second, less a little bit for the friction of copper. Why should it take more than a split second to make a trade? If there's a willing buyer or a willing seller on the other end, boom, you should be able to hit a key, and before your finger comes off the keyboard, you should own that trade. Alrighty. We also need to think about the best methods. Now, obviously, we think direct access, but you're going to find that up till now, you have only had a buy and a sell button. We're going to teach you about routes, order routing. There are things like super SOs and using the different ECNs like INET, Island, Inca,